everybody. Thank you for coming. I appreciate it. That was David. That's David. I don't know what else to say. Hello, everybody. David does that all the time. Thank you guys for coming. I really appreciate it. I do these events, these educational events for seniors all the time, turning 65, that are getting ready for Medicare. And I didn't always do this. I was a serial entrepreneur. I had many businesses, many successful businesses. And I finally was called into the insurance space about 8-9 years ago. And I started thinking about it, and we kind of guess and figure things out as we go as business owners. So I really wanted to put a panel together to kind of help spread the knowledge and try to help business owners kind of navigate the murky waters of entrepreneurship. So I have Gus Passanante, Saranto, Iris, and then Ernie's there, and he's going to talk about employee benefits. So this is me. I'm a local guy. Most of you guys know me. I grew up in Baldwin. I went to St. Christopher's. I went to Kellenberg High School. I went to the SUNY Farmingdale. This is my family. That's my wife, my 5 children, and my granddaughter.
Nice photo.
Thank you. That's not your photo. You didn't take that photo. That's my mom, my dad, my sister, and that's my family again at Christmas. So I'm a local guy. I grew up on Long Island. What you see is what you get. I wasn't always this guy, though. I wasn't always the CEO, the founder of Safe Haven Insurance. About 9 years ago, after I graduated, when I graduated college, I started a property maintenance company. And that was me. That was me 9 years ago. That was me. I got my hands dirty. I was a blue-collar guy. I started a company, a property maintenance company, and we went from $0 in revenue, a hope and a dream, and I sold the company, and we were doing $7 million a year in revenue 8 years ago. And I did it because I was fed up. I was aggravated. I did it since I was a kid. I started out landscaping, cutting lawns when I was 16. I used to push my lawnmower down the block. I had a paper route. I was really a serial entrepreneur. And I worked 7 days a week since a very young age. And there was a lot of things that I've learned along the way, and I really wanted to just show everybody some of the lessons that I've learned. And my panel is going to kind of help shed some insight on entrepreneurship. So this is what I do. I have a health insurance agency. Jonathan's here. Jonathan's on my team. He's in the back. We do Medicare, health insurance, dental vision plans, ancillary benefits, life insurance, and annuities. So we're all entrepreneurs. We take big leaps every single day. Every single day. And fear does not faze us, or most of us. All right? So there's a lot of things that I want to talk about. There's a lot of things that you guys want to learn. And that's why we're here, to kind of feed off of each other and help each other. So I'm going to bring up my first speaker, Gus.
Thanks, James.
No problem. He's a business attorney, specializes in business law.
Hello, everybody. Thank you, James, for inviting me here and allowing me to speak to everybody. I'm a business attorney. I started my career doing securities litigation, representing public companies, litigating over really complicated contracts with stocks and warrants and all different types of alternative investments. I did that for about 3 years, and I hated it. I hated not being a part of the community. I hated not being able to help the people that I know, and representing a company with thousands of shareholders across the country that I never interact with, that I don't know what they do, who they are, what they care about, and it didn't feel fulfilling to me. And my experience was in business, so about 1.5 years ago, I decided to branch out, start my own practice, and start practicing on a smaller scale at a more local level, dealing with small businesses, corporate disputes, contract drafting, business formation, and everything in between. So it's a little bit about myself. And since then, I've merged my firm with a larger firm, Harvin Crop and Pearlstein, where I handle an even broader area of practice with more resources and support staff. So I don't want to get too deep into the weeds. I want to keep this broad and general, and I want it to be beneficial for everyone here that's a business owner or part of a business, and everyone here is entrepreneurial. A couple of common pitfalls is entity selection. What are you going to start? Are you going to start an LLC? You're going to start a corp? Are you going to start an S corp, a C corp? And there's pros and cons to each and everything, each and every entity. For example, you might want an LLC to benefit from pass-through taxation. You might want an S corp to also benefit from pass-through taxation, but you're a sole owner and have an increased, a very high salary, and you could benefit from certain taxes, which I won't comment on. I'll leave that for the CPA. But there are different pros and cons to certain entities, and that's where it starts. After that, then you're going to start generating business and getting customers, clients, and servicing or selling products. A huge problem that I notice with a lot of small business owners is that these contracts aren't clear, and that leads to ambiguities or disputes, and people not knowing what their rights are or what their obligations are. So the more clarity here, the more protection that everyone has, everyone involved has, whether you think you're right or you think you're wrong. Another common issue is compliance with employment laws. I think I had 2 or 3 conversations already this morning about people who've ran into issues with the Labor Department and paying insurance for employment insurance with respect to employees versus independent contractors. There's a number of factors that courts use or the Labor Department would use to determine whether a person's an employee or an independent contractor. So it's really important to consult with somebody who understands these factors, understands how to identify or designate these people that are providing services for your company, and how those people are going to affect your business and your payroll and any potential liability exposure in the future. Let's get into the contracts. I think most importantly, something that I somehow always see are payment terms and late fees. A lot of business owners will get into contracts and will designate, let's say, a price, but they won't designate when the person needs to pay that price. And then that could lead to an ambiguity in court or something else. Another thing that I run into a lot, and I have a recent example of this, are late fees. I had a client who is a dog trainer and had a very simple 1-page contract that he probably got off of LegalZoom or Rocket Lawyer that said, I will hold your dog for 5 days, it will cost $100 a day, and then you come pick him up. He was in this position where he was boarding this dog for 2 or 3 weeks after the day the owner was supposed to come pick them up. And he said, I want to go after this person because I had to spend money to take care of this dog. I need to feed this dog. I need to walk this dog. And I provided my services 4 times the amount of what I agreed to initially. The problem there was, while there is claims that you could assert, they're a lot more difficult to assert without the protections in the contract. For example, a way to avoid this, if he thought about it in the beginning before these problems arose, is that you could build in late fees to these contracts. You could account for potential things that could go wrong in the future and enhance those protections. I always like to refer to a business attorney like insurance. This is insurance. You're ensuring that you're going to be as protected as you can be with this contract, because a contract is really useless. Most of the time they collect dust. After everyone signs it, they collect dust. That's what everyone wants. No one ever wants this thing to ever come up again. The only time this will ever come up is in a courtroom, that contract. And that's all it's used for. It's to determine rights in court. And that's it, really, at the end of the day. Another thing is termination dispute resolution. When is this contract going to end? Is this a partnership that's going to go in perpetuity? Do people have rights to terminate this contract? A lot of times, small businesses especially, don't really account for what could go wrong. Most of the time when we're starting a business, we're thinking about all the positive, all the success, all of the good things that are going to happen. Nobody's really thinking of what could go wrong and how should I protect myself in the event that things do go wrong. Another issue, non-competes and confidentiality agreements. I ran into an issue last year with one of my larger clients that had an advertising agency that they hired, rip their product, start up a company in Slovakia, and then start redistributing, and now it's one of their biggest competitors. Their non-compete that they had them execute, again, from Rocket Lawyer, didn't have the protections to allow us to enforce any of the rights that they really should have had before engaging with this contractor. So that's just an example, and this is applicable to every kind of business, but it could be a little bit different depending on the industry. So it's important to really analyze each situation for its purpose and on a case-by-case basis. Again, with the employee versus independent contractor issue, a lot of business owners want to avoid paying employees for obvious reasons, and let's put them on a 1099. But there's a lot of factors that go into it. Is this person at will? Is this person even an employee? What kind of direction is this person taking from the entity that's hiring them? Are they using that entity's tools? And there's not one right or wrong answer for every single situation. Every situation, again, is analyzed on a case-by-case basis. So it's important to just think of these things. Again, documentation always helps in every situation. The more, the better, most of the time, as long as it's clear. The next thing you're going to want to do is obviously limit your liability exposure. How do you do that? Again, contracts. You put in the contract, is there going to be an indemnification if this person does something wrong while working for my business? Is there going to be a procedure for handling this? Are we going to put an arbitration clause in this? Are we going to arbitrate the arbitration clause? Is there going to be a zipper in that arbitration clause? There's a million different ways that people can protect themselves or choose to protect themselves. And again, a case-by-case basis, so it's just important to think about. If you're thinking about it, you're doing the right thing, really, because no one has the answers to every single thing that you're going to face as a business owner. You're going to need to seek out professionals for certain expertise. You're going to seek out an accountant for tax advice. You should seek out an attorney for legal advice, and so on. A procedure for handling customer disputes. I recently had a client that had to deal with a data breach, a significant data breach, where 70,000 customers' information were dispersed across the country. Obviously, we had thousands of those people, after sending the breach disclosure notifications to these customers, reaching out to the company and trying to handle it. Is there a procedure in place? There wasn't, but now we made one, right? And sometimes you're going to learn the hard way like that. But if you do learn the hard way, let's prepare for the next step, for the next time something like this might happen. Again, record keeping and best practices. You'd be surprised how many businesses I come in contact with that aren't, that have essentially no record keeping policy whatsoever. So even if they do keep records, if they're not kept properly, it's possible that none of the records they're even keeping are going to be admissible in court. So whatever protections they thought they may have had are now useless. So it's important to consider all of these things, again, at the beginning. Again, a couple of clear takeaways. I think the biggest thing is contracts. Make sure they're clear. Make sure they're protecting you and protecting your needs, protecting your business's needs, and protecting your client's needs. Staying compliant. You're going to hear from an HR person, an accountant. There are a number of different rules and regulations that are going to be imposed on you as a business owner, especially in New York, that you need to be aware of. Especially now, things are volatile. Things are changing almost by the month. I'm not sure if any of you heard about the BOI reporting. There was a lawsuit filed in Texas, and then a nationwide injunction was issued by a district judge in Texas that then went up to the Fifth Circuit and then was appealed. So this is a federal business owner, BOI, a beneficial ownership information reporting requirement, where owners of businesses now need to disclose their ownership interests. And the injunction was affecting the entire country. And if someone wasn't aware of this, I think the fines for this, and don't quote me on this, I think they're somewhere around hundreds or thousands of dollars a day. And this is changing by the minute. And this is right around the holidays. I think that lawsuit was filed middle of December. The lawsuit was filed middle of December. The deadline was originally January 1st. The court changed it to the 13th. The court then removed the requirement and then reinstated it to the 15th of January. Though all of those things happened within the matter of 2 weeks. In Texas, where we had, if you're not involved or if you're not looking for this information, you never would have known that, and people could have been in a really bad position. Thank you guys for listening to me talk. I appreciate it. It's a pleasure. Thank you.
We're going to do questions at the end.
Good morning, everyone. Thank you, James. Thank you, James, for having me here. Thank you. I'm very happy to be here with such a great group of people. My name is Iris Rivera, Rivera Resources. Just a little bit about myself. I worked in the HR field for over 25 years. I was a single mom, raised my kids, worked at the same company for that amount of time. I grew with that company. They gave me the opportunity to grow into my HR field. And while I was there, I really couldn't be jumping around from job to job. I had to be, needed stability for my children, to raise them, have them go to college. Now my kids are adults. I have grandchildren. And I'm very happy to say that when I decided to take this leap of faith and go into being an entrepreneur, it was a very scary time for me, but my kids were my biggest cheerleaders in getting this done. So I went on my own last year, February of 2024, so it's been a full year. So I'm very happy for that. My focus and what I specialize in is helping small companies and provide them with the solutions in everything that has to do with HR. And as James was saying, sexual harassment is one of the biggest topics, most important in dealing with any sexual harassment claim, not only from an employee standpoint, but also from a supervisory managerial standpoint. Why is that? I go throughout the whole island doing these trainings in English and Spanish. And it's not just doing the training and talking with them, it's interacting. It's making sure they understand the proper steps to take when there is a claim from an employee. The employee needs to feel heard, that this is being taken seriously, but also the manager needs to understand that there are proper steps to take to make sure that they do their due diligence. And that is the difference between not handling a proper claim and handling the claim the right way. And that's what I'm here for. I have a client, small client that came to me about 5 months ago. She was being sued. And she's predominantly Hispanic, has about 10 employees. 2 of her employees were suing her for the same reason. She didn't have proper documentation. As Gus was saying, it's the most important thing to have. No matter how big or small you are, you need to have proper documentation. There has to be interaction between employee and manager, making sure that we follow those proper steps. So I handle a lot of the sexual harassment claims, the trainings throughout the island. I've done a lot of them throughout, out east, here in Nassau. Very important that we follow the step-by-step processes. I also help with handbook development and revisions. Handbooks are very important to keep up to date on a yearly basis. As Gus was saying, laws are changing weekly, monthly. There are a lot of different changes, especially now, there are a lot of changes, and we need to make sure we stay up to date with all of the handbook revisions. I also help with all the employee relations. What does that mean? That means that I come in and I help the manager deal with any issues that an employee may have. Whether it's the manager with the supervisor, vice versa, employee with employee, I'm here to assist. We already spoke about the trainings. I do a lot of policies and procedure implementation. That means I help with onboarding processes, making sure we're following the right path. And I also do everything that has to do with administrative, translation services, manuals, handbooks, you name it, that's what I'm here for. And so no matter how big or small an issue may be, and a lot of the small companies that I work with, small clients, they don't know what they don't know. And that's why I'm here. So if you have any questions at the end, please feel free to come to me. I have my contact information. It's all there, so I'm here to help. Thank you.
Thank you so much, Iris. So how I initially got into health insurance was always that one spouse that was left behind. And I got certified on the exchange. I started working on the exchange, and the exchange is great if you really don't make a lot of income. But if you're making a decent salary, you're paying full price on the exchange for really crappy insurance. So I started looking into alternative insurances. I really looked all over, and we came up with some really great plans. We started working with some unions. We have union benefits available, and a lot of great coverage. So this was their plan. This is traditional Oxford, like if you were to call Oxford, which you really can't, right? You really can't. They just don't write one family. You need multiple employees, right? So you really two or more, right? So here's the quote that Jonathan, I took a picture of it, 5,400. Now, with one of our plans, it's not medically underwritten. It's a non-med plan, meaning you could have any illness in the world and still be approved for this plan. A family plan with a $1,500 deductible, $2,800, $2,799.
Is that a month or a year?
That's a month for a family plan. For a family plan, that $5,400 was for a family plan per month as well. So now, if you're healthy, here's this: $30 office copayments, $50 specialists. It's really a great plan. It's Anthem National Blue PPO. Now, if you're healthy, we could put you on a net and a POS for $2,300 a month, $2,350. This is a $2,000 deductible plan. Right here, $25 copays for your primary care, $40 for your deductible, $40 for your specialists. So you guys have options. We just don't work with these two companies. We work with probably 10 other ones, and there's really creative ways to insure yourself. So if you know anybody, especially 1099 employees, if you work by yourself, realtors, we could definitely help you, realtors, and save you money. We also work on the exchange. If you're not making as much as you need to, and you're getting a tax credit, we could write you on the exchange. So there are many options. We work with individuals, families, small groups, large groups. We have a plan for everyone and every budget. All right. So a little bit about why we're doing this. Again, when I started out in business, I was a young father, and I really wanted to protect my children. And I wanted them to have generational wealth. And I didn't know what I was doing at the time, but I kind of figured it out as I was going. I got a $1 million term life policy for $67 a month. And then I got a whole life policy, a $500,000 whole life policy. And the insurance agent was sitting at my conference room table, and he told me, do you know when you have a good month, you could put extra money in your life insurance? And then when you need the money, you could borrow it against yourself. And I thought this was like amazing. Like I had no idea. I never heard of this before. So I started doing that. And when I needed to make a purchase for my business and the market was down or I didn't have the cash, I would borrow it from my life insurance, really. So there are so many ways to be creative with life insurance. How can we keep and replace key members of our team? How can we protect our business in the event of our death or our partner's death? What happens to our business if we die? These are all questions that we need to think about that nobody really thinks about until it's too late. My grandfather, God rest his soul, had a partner. They owned a pharmacy. When my grandfather died, there was no plan in place. It was a nightmare. It was a nightmare. And my grandmother didn't have the fight in her because she had to deal with my grandfather with cancer for 18 months. So she was just drained. So there's no plan in place, and that's where insurance comes in. I want to talk to you about this guy right here. This is Doug. Doug was my main guy. He was with me for 5 years. I trained him. I molded him. He was my right hand. He was my eyes and my ears. Henry's in the back. He was with me for years. He knows Doug. One day, Doug didn't come to work. Doug didn't come to work. He never missed a day. He didn't answer his phone, got nervous. I had emergency contact for him in the office because I did keep some records. I called his sister. She said, Doug was actually supposed to send me money last night for my mother, and he never did, and it's so unlike Doug. Well, I went to Doug's house. His roommate said, I haven't seen Doug all day. He was in his room. Knocked on the door, didn't answer, broke down the door. Doug was on the floor. 50 years old. Didn't do drugs, didn't drink. Undiagnosed high blood pressure was the autopsy. He had a massive heart attack, all right? Now, how do I replace a guy like that? How do I replace a guy like that? I don't have 5 years to train somebody. I don't. Key man insurance. You take a life insurance policy out against your key man in the event that something happens, and now you have the funds to replace him. Get somebody 10 times. I would have loved somebody 10x Doug, let me tell you, because Doug was amazing. If I could afford a salary and 10x Doug, that's great. But it helps with the transition of training somebody. You could train 2 people because now you have that extra cash reserve to help replace this guy. Key man insurance, it's tax deductible, and you could use it as a benefit. Like when the employee retires or leaves, you could sign over the policy to him. So it's a way to retain some good employees also. The next one's you all. It's all you, buddy. This partnerships. We're going to talk about buy-sell agreements, which is also something that Gus does all the time. One partner passes away, the other partner doesn't know what to do. Does anyone have partners in here? Does anyone have a partner? No? Okay. Well, I know a lot of partners. Would you like to work with your partner's wife or child? Because that's what's going to happen. So how a buy-sell agreement works is the business pays for 2 life insurance policies for each partner. So it's tax deductible. It's an expense, correct? Right? So in the event that one passes, the life insurance buys them out of the business. So there's different ways to protect yourself and what you worked your whole life for.
And there's also, when a partner dies, there's also the fact that there is an estate tax that's owed, and it's based off of the value of their business. So now, if the business is worth $5 million and you've got 2 partners, well, now that the deceased partner has to pay taxes on $2.5 million. So life insurance is a great way of offsetting it. So this way, now you have the funds. It's typically, if structured correctly, it's received income and estate tax free, and now you have the resources to pay for the potential tax liability. And the IRS wants the money in 9 months. Right. Not 10 months, 9 months. And the value is date of death. So maybe this was the primary partner, but he dies, and maybe there's the fact now, 6 months later, the business now, instead of being worth $5 million, is only worth $3 million. Not in the IRS's eyes. It's still worth $5 million at date of death. So keep that in mind.
This one's you.
This one's me.
No, this one right here.
Oh, golden handcuffs, okay?
Jonathan, actually, when I started working with Jonathan, he taught me about this, and I was really intrigued. So, and this is a great tool. So why don't you tell everybody about it?
All right, so life insurance, okay, I will tell you, the industry, the life insurance carriers do a horrible job promoting their product. Horrible. There are so many tremendous opportunities to use it in a business setting, even in a personal setting. So one of the great opportunities for a small business is what we call golden handcuffs. You got a key employee. So what was his name?
Doug.
Doug. Mm-hmm. So Doug was a key guy, okay? So if you want to keep Doug or a couple of people, you purchase a life insurance policy for them. You pay the premiums. In the event, and there's usually a contract that's involved. So you get an attorney to write the contract. You have the accountant to make sure that you can correctly the tax consequences.
Limit your tax consequences.
And,
yes.
And essentially what you're doing is business buys the insurance, okay, owns the policy, and in that contract they pay the premiums. So let's say the employee, let's say it's a 10-year contract period. So what happens is, let's say in the 7th year, the employee dies. Okay, so now what happens is the business gets back all of the premiums that they pay typically, and then the remaining goes to the estate of the employee that died. Let's say the employee leaves. Okay, now same thing. So now you have an in-force policy. Okay, now you could transfer it to another key employee. But let's look positively and say,
You're very negative. I definitely would go the positive route.
Okay,
I wouldn't
so
have led with you started with the negative. You never start with the negative.
Is a little bit more sexy, But the positive, the guy, the employee lives and is with you for 10 years. So at that point, you could surrender the policy to them. They've got all this great cash value. It builds up on tremendous tax advantages. Or you can continue the policy and just extend the contract and such. Every single Fortune 1000 company has these executive bonus plans in place.
It's like a deferred comp plan.
It absolutely is a deferred comp. And also life insurance, if used correctly, you can, and this is tying in Iris here, it's a non-qualified deferred comp. So you could discriminate. So these are good words in this
I don't like that
particular
word.
case. But neither do I. But these are the technical, meaning that you could provide a benefit to key employees that you don't have to do for all employees, such as like health insurance. You have a class of people, everyone has the right to participate, okay? But with life insurance structured in certain ways, you can discriminate, which is
Could be for
a
your
tremendous.
executive team,
For
your management.
Exactly.
If you want to attract people, and this is a great way, on top of a retirement plan, if an employee stays with you for 10 years, 20 years, retires with you, you hand them over this life insurance, and it's got an amazing cash value in it. It's a great tool to attract really good employees.
And retain. That's the other thing. Turnover is so expensive to a business. So you want to keep your key people.
But you also want to have somebody like Gus, a business attorney, draft up a contract, because you don't want one of your key employees staying with you for the clause 10 years or whatever, and now having access to all this cash to become your biggest competitor.
Correct.
So there needs to be an attorney involved. There needs to be a non-compete in there. There's definitely clauses, but it's an amazing tool. So benefits of life insurance: creating generational wealth, asset protection, infinite banking. There are many ways to use life insurance. Most of it's tax deductible. There's all write-offs. So definitely, if you have any questions, reach out to one of us.
And I'll just share. The other most important insurance that everyone here needs is disability insurance.
I forgot that slide.
Right.
Shit.
Is disability insurance. How many people know a police officer or a fireman or someone? Okay. When they go on disability, what is it? 3/4 pay tax-free for life, right? So they understand the importance of what that particular benefit is, okay? So it could be a minor injury or it could be a major injury. Makes no difference, okay? A disability is the #1 reason why people go into financial ruin, okay? So something you should look into for yourself. And also there are special policies just for your business where it's a 2-year benefit period. So this way you can replace key people or yourself, or get the business up to a point so that you can try to sell it. Disability. That's how I got into this business.
That's how he got into this business.
But I won't go into
with
that.
his dad. But
Right.
I actually have 2 clients now that are on permanent disability that they pay privately. And guess what? The money that's coming in is tax-free because
That's
they
right.
paid it after they pay their payroll taxes. So it's tax-free, so it doesn't have to count as income. The husband and the wife, ironically, are disabled now, and over $20,000 a month in income, tax-free income.
And you could structure it also as a benefit for your employees through a payroll deduction, which I think is a good segue.
Well, yeah, we're
All
going
right.
to actually, I have a better one.
Okay.
So, all right. So this is my Uncle Bill. This is Jose. This was the only picture I could find from Jose in my phone from 9.5 years ago. So my Uncle Bill, he worked with me. He was my shop manager, worked on all my trucks, all my vehicles, made sure everything ran 100%. So on top of losing Doug, my uncle got diagnosed with cancer, and he couldn't work. And I mean, really, he was on disability Social Security, but it wasn't really enough. But it takes 2 years to get on Social Security disability. So he was struggling with his cancer treatments. He had to sell his car because he had a payment. He couldn't afford it. This is Jose. Jose didn't die with me. I'm not the Black Widow, all right? But when I did sell my company, Jose transitioned to the new owner. And he had a massive heart attack while he was working with the new owner about a year ago. We're going to bring up Ernie right now, and he's going to talk about how some things could have changed each of their lives and their families. Here's Ernie Vitoli from Chubb. We write a lot of Chubb insurance combined. Ernie works for the carrier.
Health insurance, deductibles, co-insurances, that can make your head spin, especially for your employees. And we're going over how to attract and retain employees. How many people here have employees, 1 to 5 employees? 5 to 10 or more? Just, okay. With voluntary benefits, they help you attract your employees, keep them, loyalty, retain them. We help employees get paid cash directly to them for any type of accident, sickness, disability. When James was talking about disability, some of these private plans have big waiting periods, maybe 180 days before the benefits kick in. With a short-term disability plan, you can get up to 12 months benefit with a small waiting period to cover that gap, so you have income coming in. Combined, been around for 100 years. Started back in the early 20s. W. Clement Stone started the company with $100. Built the company in Chicago up to a multi-million-dollar corporation. In 1971, they came to New York and opened Combined Insurance Company of New York. In 2016, Chubb bought Combined. So we are now a satellite of Chubb Insurance, which is the biggest P&C carrier in the world. So we're backed by Chubb now, which enhances we don't have to worry about claims, everything's being paid, and we're backed by one of the best insurance carriers on the planet. What these plans do is help fill the gaps. We were talking about cancer. If somebody dies of cancer, talking about somebody, what if you live? You know, diabetes, you don't die from diabetes, you die from the complications of diabetes, organ failure, heart attacks, strokes, whatever they're putting in your body, whatever your body's filtering out, those are the organs that start getting affected by cancer. We have products that help pay directly to the employee, yourself, whoever it might be, to help them recover costs, get reimbursed back for out-of-pocket expenses. Because we're talking about what was the out-of-pocket on that health plan? $20,000 for a family? So if somebody gets sick, where's that $20,000 going to come from? Because you got to pay the insurance company. Insurance company is going to pay your bills for that co-insurance, that deductible, that $1,500 deductible, $2,000 deductible, whatever it might be. A lot of carriers are moving over to a co-insurance instead of a copay. So you'll be liable for 20% copay, 30% copay, instead of that $35, $45. So a lot's changing in the health insurance, and a way to attract and retain your employees is maybe offer them these products. We have 5 products: accident insurance, critical illness, which is cancer, heart attack, stroke, any type of illness, short-term disability, and life insurance. We have small UL policies that employees like. You know, it's not for somebody who needs $400,000 or $500,000 insurance. It's for the rank and file employees making, you know, $20 an hour. They're struggling. They need life insurance. They can get policies from $10,000 to $100,000, and it's affordable. Rising care, healthcare. Everybody knows every year your healthcare goes up 3%, 4%, and when you have a lot of employees, that could be a lot of money. So we try to help every employee. We have our own enrollment system. We have a streamlined enrollment system. We sit down with each employee, explain what their benefits are, what their deductibles are, what their co-insurance are. This way you have a good understanding. We educate them. Education is key when it comes to your employee benefits. You give employees an employee book. What happens to it? Where's that handbook go? Right? It has a ring mark from their coffee on it. It's used as a coaster.
But they signed that affidavit that Iris gave him that they read and understand the handbook. So
Yes.
that's all that matters.
They
They
read
can do
it,
whatever
right.
they want when they're
They
done
read it
with
during the coffee.
As long as we have that affidavit that they understand it and read it, we're
Yes.
good.
And then you ask them a question, what's your copay? I don't know. So we educate employees. We sit down with them. When we come on a site, everything is streamlined. We make a group meeting if that's what an employer wants, or we'll send out announcement letters. This is what we're doing. We partner with Combined, the Chubb company. We're bringing them in to talk to you about supplemental benefits, how they can help you get reimbursed for out-of-pocket expenses. Because there's facts that people don't have $1,000 in their bank account to pay for an incident, an accident, and especially if they have kids. Who has young kids here? How many times you were in the emergency room last year?
Oh, actually, yeah.
Huh? So our accident plan covers for emergency room visits, hospital stays, confinement, you know, from everything, burns, cuts, sutures.
My pills now. I forgot all about it.
So you have a kids playing sports, dancing, karate, football, soccer, whatever it is. They're tearing up their knees, they're tearing up their shoulders. You know, burns. Burns are in the kitchen. Sometimes you burn yourself in the oven. You know, my arm's scarred all over. Up there, I got the American flag stripes up my arm from the rib. But the burns, you get infected right away. So you have to go to the emergency room for it. And that's a cost. So we pay for initial emergency room visit, whatever the incident was. Was it a cut? You cut your hand, cutting a bagel. You got stitches inside your hand, covers for that. So the accident plan covers a lot and it helps the employees. It's very inexpensive. An accident plan is $4.32 a week. A lot of employees take it because they have children. Or they're working at a job, you know, a shop or whatever it is. They're getting hurt all the time. I had a mechanic call me up last week. The lift slipped and crushed his hand. So he's in the emergency room now. Broken hand, surgery, dislocation, broken bones. And it just covers whatever the employee needs, and it helps them out. And they appreciate that. If I said to you, you're my employee, and I said, I'm going to give you a 10 cents an hour raise, what would you say to me? No, exactly. Shake your hand. But if I said to you, you could say it, go ahead. Yeah. But if I said to you, I'm going to give you a benefit that's going to help you and your family, God forbid something should happen, we're going to pay you cash directly to you that's going to pay for emergency room visits, cuts, burns, sutures, whatever it might be. Would you want something like that? Yes, 10 cents an hour for an employee to buy this for their employees. A lot of my customers do that for the employee. Then they open up a menu of other benefits. So it's like a one-stop shop where they can now pick and choose what they want. And sitting down with the benefit consultant, they say, okay, we usually ask them for 1 hour pay a week. So if they make it $20 an hour, take that $20, put it aside every week, and buy benefits. These are the benefits that are available to you. So if they say I can afford $20 a week, we'll figure out what that $20 we can buy from different products. Could it be accident, could it be disability? And we ask them. We call it a 1-minute benefit planner, where we sit down with them, we show them a list, which of these concern you the most. And we'll let them figure out what concerns them. Instead of sit there and try to talk them into this benefit, that benefit, we don't work that way. We want to know what the employee's concerns are. And when they look at it, say, oh, getting this amount a month, if God forbid I got sick and hurt and I couldn't work for 2 months, 3 months, where's that money going to come from? Our short-term disability plan. What I like to do is set it up like the New York State disability, where you get 26 weeks, $170 a week, with a 7-day waiting period. Who can live on $170 a week? Right? That's your phone bill, probably, or your cable bill.
Food now.
Right.
Eggs, I think eggs.
Eggs, yeah, eggs cost $170 a week. So
By the way, eat the eggs.
our disability plan, you can choose anywhere from a 3-month, 6-month, 12-month benefit, 7-day, 14-day, 30-day waiting periods. We try to design the plan what's comfortable for the employees. And they're happy with these benefits because now they know, God forbid something should happen, they're not going to come to you, the business owner, and say, hey, I need $500. Could you pay me? I'm going to be out of work for 3 weeks. Could you pay my pay? So we're putting you're putting yourself in a loan, the bank. We're going to come for you for a loan. So these benefits help them recoup cost. The best product we have is called critical illness. We have competitors out there. I don't consider them competitors because this product nobody can match. Critical illness covers for heart attack, stroke, organ failure, multiple sclerosis, cancer, any type of cancer except skin cancer pays a reduced benefit. But let's say I'm diagnosed with a malignant tumor. I go into the hospital, they say, all right, you got cancer, you have to go for chemo. I can choose from $10,000 to $100,000 in benefit. The benefit is a 3 times benefit. So if I choose $50,000, it's like having a $150,000 policy. Now I get diagnosed with a malignant tumor. I get $50,000 up front, paid to me upon diagnosis. A year later, I'm going for chemo, I'm going for radiation, whatever it might be. My organs start going because now your kidneys are filtering out the radiation and the chemo. You have kidney failure, you get paid another $50,000. Maybe a year later, I have a stroke from heart disease, another $50,000. So that one policy paid out $150,000.
Like, how would that have changed, those 2 employees' lives? I mean,
Sure.
It really would have. And another great thing, and I don't mean to cut you off.
That's right.
Sometimes you have an older employee, right?
Yes.
And they don't have life insurance.
Yep.
But when you have life insurance through a group, they could automatically go in.
Yep.
So that's that's an amazing tool with group. And a lot of these things, $20 a week for a cancer plan, you know, I mean, that's unheard of. Lump sum payment, get paid for cancer treatments. I mean, there's so many great things, and I don't mean to cut you off.
That's all right.
We started a little late, and I mean, this is some really great stuff. Now, you talk about competitors. I used to be contracted with Aflac,
Right.
and I used to offer it, and they were a nightmare paying claims and things like this. And that's why when you said the emergency room, it clicked in my mind because two of my daughters went to the emergency room total 3 times over the summer, and I forgot to submit the bill. So I was like, oh shoot, it's so simple. There's an app, you just take a picture, you upload
submit it right into the app.
and you're done. So there's a lot of great plans that you can incorporate as businesses. And what's also is, it comes off of the
Payroll
the
deduction.
payroll
Everything's
deduction.
payroll.
So you're not paying tax on that.
Right.
On that. So there's a lot of great tools.
Thank you, everybody.
Ernie, you're awesome. Thank you. I want to bring up Saranto. He's a CPA. He's great. And just a little bit, there are a lot of CPAs out there. There are a lot of accountants. There are a lot of tax professionals. And I know when I was in my prior life, we had sales tax that we had to pay, right? So whenever you go buy material, a lot of places charge you sales tax, whether or not you have a tax ID or not. But what my accountant did for years, she wasn't applying for the credit for the sales tax that we paid already. So when I found out about this, I was like, holy crap, I could have been saving all of this money on this prepaid sales tax that I already paid. So it makes a difference who you talk to. And I have to tell you, Saranto, you're so creative. I mean, you really are. As far as, I'll let you talk because this guy is really a talented individual. It just hit the hour. Let me scroll past.
Get me home.
Ernie, I'm sorry. We blew through like your 100 slides. I apologize.
All right, I'm going to try to go through this quickly. There'll be questions we can answer at the end. Thank you all for coming. I really appreciate when business people come and take the time out of their day, busy day, to hear us. So thank you, James, for this opportunity. Thank you for coming. Have an office in Port Jeff, family of 4. Had the office for 31 years, been married for 31 years, 4 kids. So, yeah, why tax planning? This is Abraham Lincoln. You cannot help the poor by destroying the rich. You cannot lift the wage earner by pulling down the wage payer. Love this Arthur Godfrey, comedian. I'm proud to pay taxes in the United States. However, I would be just as proud to pay half the amount of money in taxes. So let's try to get there. Let's try to get there. So there's a tax triangle. We'll go through this really quickly. The base of the tax triangle, this is the people who pay the most in taxes. If you're 2 W-2 employees at home, you get paid, you pay for your goods and services, you pay for your cable, your car, your meals with after-tax dollars. A little bit above that, where you're paying less in tax dollars, is a self-employed person, like myself. I'm self-employed. My clients pay me, God willing, hopefully, some of them, most of them. And then I'll go and pay for my goods and services and then I will pay my taxes after I pay for my car, my cell phone, my meals. And I do happen to eat a lot, if you notice. So, but I get to pay the government after I take all those out. And most people are going to be in the 22% federal tax bracket, 7% in New York State. At about $64,000, you hit the 7% in New York State. So let's call that, in my math, 30%, 29%, 30%. I'm paying for stuff with a 30% sale, 30% discount, because I get to pay for it with pre-tax dollars. So that's a little bit better on the tax triangle. The very top of the tax triangle, people paying less are investors. So you have municipal bonds where you pay no tax on the interest. You have qualified dividends where you pay 15%. When John Kerry was running for president, it was in front of the New York Post. They were outraged that they were paying 7.5% because they had a couple of $1 million on municipal bond interest, a couple of $1 million of dividend interest at 15% municipal bonds. So beautiful tax planning. Where people were outraged, I thought, what great tax planning. So you got to try to get to the investor base. First of all, try to get to the business base. Once you get to the business base, start making money, try to get to the investor base. So we're going to talk about corporate planning expenses. There's 3 types of tax planning. One is business expenses, how you can get a lot of your personal expenses into business expenses, income shifting to people in lower tax brackets, and retirement planning. We're just going to hit real quickly on it. Why be in business? Business expenses are deductible, like I mentioned. You want to convert personal expenses to business. You need only intent to be in business. You don't have to make money. Amazon didn't make money for many, many years. So you need to have the intent. The deductible business expenses need to be ordinary, necessary, paid and incurred in the tax year, and connected to your business. What's ordinary and necessary? Whatever you deem to be ordinary and necessary to grow your business. Now, some of you in the audience might be W-2 employees. Try to get a business. There's a lot of multi-level marketing out there, Mary Kay, Pampered Chef, things of that nature. So if you're a W-2 employee, try to get up on that tax triangle and be a self-employed person, even if it's for a small amount. Most of these multi-level marketing make some money, but after you're done with all the expenses, really lose some money. So if you're saying, hey, this guy's talking about stuff, but I'm a W-2 employee, try to get into a business. So in investing in yourself, we talked about some deferred compensation through life insurance, always a good thing to do. Maximize salary reduction opportunities. Brand and market your business. You know, if you want to go out, do something outrageous and try to brand your business and get a tax deduction, that's also worth it. Spend training to insure employees so we'll talk about renting your home. We'll talk about the Augusta rule in a little bit. You can pay for business trips. A lot of, especially pre-internet when I first started 30 years ago, a lot of seminars were in Orlando, Vegas, and they still are. So you can go and enjoy yourself. There's nothing wrong with enjoying yourself and having a tax-deductible trip. You can only deduct the portion. You can deduct the flight to and there. Let's say you go to a weekend seminar in Vegas, and you go for a week. Well, they'll give you a day before and a day after for a hotel, but they'll give you the whole flight. So it's something to look into. You can always have a good time and still write it off. You can invest in new equipment. We talked about some, we didn't really get into the medical expenses, but there are a lot of medical reimbursement plan, flexible spending, health savings account. James, you get into all of those, and especially the combine thing. Once you get something to be a salary deduction, then you're not paying tax on it. So it's a good thing to look into these things. I'm not going into those in details.
Can we just rewind for 1 second? I just
Sure.
want to talk. No. I just want to talk about HSAs,
Yeah.
health savings accounts. Does anybody in this room have an HSA? No. Travis, do you use it? Do you use that Visa card that you got for medical expense? That was the wrong answer. That was the wrong answer. So here's the deal. You can contribute to an HSA. What's it in 2025 as a family? $8,300 or did it go up?
I think it went up to 85.
$8,500. $8,500 tax-free into an HSA. Now, you could direct that HSA to an S&P 500 fund or a NASDAQ fund, right? And it will grow tax-free. How old are you, Travis? 49. When are you going to retire? You don't know. So think about that. $8,500 a year, tax-free going in, tax-free accumulation. You would have a monster HSA when you retire.
What can you do single?
Half of that, so $4,250. So now I don't make any money on HSAs, but I tell all of my clients the IRS requires that you have a $1,500 deductible plan or higher. That's their high deductible plan, $1,500. Anything after that, you could save. Now what happens is save all of your medical receipts, all of your CVS receipts, right? Save them over the whole course of your life. Save them. Then in retirement, pay yourself back. Take all that money out that grew tax-free and pay yourself tax-free. It's unbelievable. And you could also use it for Medicare expenses too. So a lot of people don't know that, and a lot of people have that HSA Visa card, and they love swiping it and love charging it and love spending that money. But save it. It's triple tax advantage. So it's great. Sorry, Saranto. I just wanted to jump in on that.
No, it's awesome. It's good. You can speak about health savings account a lot better than I can. So, and with passion. So we talked about holding meeting in resort places. So you have a small S Corp. You can have board of directors. You want to have a meeting somewhere, you can have a meeting somewhere and pay for the board of directors. We have an expression as accountants: pigs get fat, hogs get slaughtered, right? So you don't overdo it, but if you want to take your family, who's the board of directors, to a meeting for a couple of days and write that off, you can do that. You have to have minutes. You have to have the right documentation, right? But as long as your I's are dotted and your T's are crossed, and if you're doing something like this, you make sure you talk to Gus and dot your I's and cross your T's. And then you can start writing off your trips, not a lot a year, one a year or so. So deductions over you. So these are some of the common things that we talk about. Some of them are a little bit more mundane, but just to get in it. Form a business. We talked about if you don't have a business, get a multi-level marketing business. Please have a business on the side. And then the proper business structure. If you're real estate, you want to be an LLC. If you're a small business, most of the time you want to be a small S corp, depending on your revenues. Credit card for a spouse. A lot of times the spouse isn't paid by the business, but the spouse helps. He or she would go to the bank for the person. He or she would go to Staples for the person. The spouse should have a credit card where the spouse can put their gas on the credit card. If they go to Staples for any reason, they use the company credit card. So a lot of people have their spouse helping them. Don't need to reimburse them, but give them at least a company credit card so they can write that off. Car mileage versus actual. If you have a multi-level marketing business, you're probably going to do car mileage. If you have a business where you work 100% or 120% on your business, you're going to probably take actual for the car, but you want to look at mileage or actual. Self-charge rent. If you work for yourself and you work out of your house, you want to charge yourself rent, generally speaking. Let's say you charge yourself $1,000 a month, because it's somewhere between $750 and $1,000 a month would be an average office rent. You charge yourself $12,000. Now you can write off a percentage of your landscaper, a percentage of your maintenance for the house, a percentage of utilities. Some people do that as well, but pay a percentage to the business. Much more powerful if you pay yourself rent. And in my experience, if you pay yourself $1,000 a month in rent, you're going to get down to $2,000 to $4,000 of gross income that's left over. So it's not a total $12,000 write-off, but you can save about $8,000 of write-offs by self-charge rent. Education expense, you can pay for you or your employees' education, so that's tax deductible. You can have a tuition assistance program. So if your kids are working for you, you can put up to $5,000. You can pay up to $5,000 a year as an employee as a tax-free fringe benefit, but it cannot be what Jonathan did, discriminatory. So if you pay for your kids, you got to pay for other kids as well if they come up. See, that's something. If it fits, you might want to do that. If you don't have a lot of employees and you have children going to college and they help you, could be a good thing to do. Personal growth, if you like Tony Robbins, Robin Sharma, any one of those people, and want to go to their seminars, you can make it tax deductible, and they're usually in some other location that's not here. A lot of people forget the interest on credit cards. They have some credit cards, they have interest on it that they use for business. They forget to write off the interest. Or recently with the pandemic, SBA loans, a lot of people, you don't see the statement, so they forget to write off their SBA loan interest. We always have to ask them, where's your SBA loan interest statement? Equipment purchase. If you purchase equipment, you don't even have to pay for it. As long as you get into the obligation to pay for it, you can write it off. So at the end of the year, you want to buy a $10,000 server and finance it over 5 years at zero interest. As long as you get into the obligation to pay it, you can write off that full $10,000 server at the end of the year. Set up a petty cash system to record petty cash. There's a concept called de minimis. The IRS doesn't want to see receipts for meals under $75 or under. So if you go to the it's not a biggie, but if you go to the bank and pull out $100 a week from the ATM, it's not much. It's $5,200 a year, but it's just a little petty cash that you can just put in your pocket. And if you and your friend go out to a lunch or dinner or something like that, you just put it in your diary, and now you have another little deduction that you can write off. Not a big one, but it's a gimme. You take the gimmies and you start stacking them up, and they start being worth something. This is an old slide. It says meals and entertainment. President Trump took away entertainment in the first term, so it's just meals. It's a income shifting. So another good income strategy is income shifting. We're not going to talk about. We're going to talk about a little bit shifting income to family members, but you can always gift and then lease back property if you're really doing well for yourself. Or if you have some royalty, you can assign it to somebody in a lower tax bracket and charge a fee for it. So the typical concept is for children to be on payroll. Now, they have to do legitimate work. They have to clean the company car, clean the company office, run some errands, something like that. But the first 14,600 in pay is tax-free. And if it's from a partnership or a sole proprietor, then the children are not subject to Social Security tax. So it doesn't work great for an S corp. But let's take an example. Like most of my clients are S corps. What we would do is we'd give a spouse a 1099 for the kids. Let's say you have 2 kids you want to put on payroll. They're about 12, 14 years old, thereabouts. They're helping you out a little bit. You can pay the spouse a 1099. The spouse would have what's called a Schedule C, a sole proprietor schedule. Now the spouse pays the 2 kids $30,000, let's say, or $32,000, and there'll be no Social Security tax, no income tax on the $14,600. And you're like, well, Saranto, you're paying him more than $14,600. Yeah, anything over that is taxed at the kid's rate, which is 10% in the beginning. So even though you can go over that 14,000, if you can, because then you're paying at the kid's rate, which is probably, if you're paying your kids, going to be much lower than your rate, I guess, if you're doing this. And the other thing is you can start stacking, as I mentioned. Now, the kids who are on payroll, I put my kids on, I had 4 kids because I wanted to put a lot of kids on payroll. I didn't realize it cost so damn much money. I just kinked my plan. At any rate, what I did, my wife and I have 529 plans for our kids, but I had my kids set up, I set up another 529 plan for my kids. So my kids' money went to their bank account, from their bank account went into a 529 plan, and then that was the first money used for college. Their 529 before we went into our 529 plan. Now, if you're really generous, you set up a Roth IRA for your children. I'm not that generous. So later in life, I have started doing that. Set up a Roth IRA where the money is going to the kids tax-free, and that will never, ever be taxed. So it can grow tax-free. With the Roth, love Roth products. I just love. There's a saying that's later on in the slide. Do you want to pay tax on a seed or the crop? I'd much rather pay tax on a seed. Let the money grow tax-free, and then it will never be taxed. Okay, and it's not only children. You can look for other people in lower income tax brackets. When I first started, my mom was retired. She'd come and bother me, and it's like I love my mom, but let me work. So I figured, what the heck can I do? Let her go to the bank, bother the bankers, right? Let her run some errands. And I gave her a small stipend. I did her taxes, and I charged her a big rate. No, that would just get the money. That would just get the money back to me. No, I gave her a stipend, and she was in a lower tax bracket than me. Even when I first started, she just had Social Security. The Greek immigrant mom didn't really have much. But people can do this with their parents. People can do this with their brothers or sisters who are going to medical school or law school who aren't making much money, and help them out. So income shifting, usually to children, could be parents, but somebody you know, like, and trust, family members usually.
You have to like them?
No, that's true. It helps, though. Okay, real property, business use of a second home. Renting your second home, if you rent out a home for 14 days or less, it is not taxable. It's called the Augusta rule. Augusta is a golf tournament, and people around this area in Georgia, I think it is, would rent out their house. And if you rent out the house, the IRS doesn't want to be bothered with anything 14 days or less. So you can rent it out for a week or something. Airbnb is now popular. But you can do this for your office as well. If you want to have a get-together for every August, we have a get-together at my house for my staff and their families. So I can rent out my house for a couple of days, deduct it from my taxes, and it's 14 days or less, so I don't have to worry about claiming it as rental income. So it's something you want to look at, maybe not appropriate for everybody, but get creative with it. Investing, if your income's over 150, property losses can't be deductible, you carry them forward. So maybe you have vacation property that you rent out. You want to allocate that between your personal expense and the rental, because the rental you're not going to be able to write off for a long time. So if you do have Airbnb property and you use it personally sometime, you want to take that personal expense and write off the mortgage interest or real estate taxes on a personal side if it makes sense, if you're having losses. A lot of people have losses on real estate. Again, with real estate, you want to do a cost segregation study, a little bit more involved in the seminar. But this way you pay an engineer to come in, $5,000 to $10,000. You accelerate depreciation. Really worth it on property. Even if you're buying a single-family home for $500,000, I'd recommend a cost segregation study. I'm not going to get into retirement planning that much. I'm just going to, just my personal philosophy is pay yourself first. Always, if you think you can't do it, please pay yourself $50, $100 a month. Start a retirement. I don't even sell the stuff. You should plan for your retirement. You know, you're always going to pay your bills. You know, you're worried about paying your bills. Pay yourself first until it hurts a little bit. Maybe that's $100 a month. Maybe that's $1,000 a month. But you want to start dollar cost average on a monthly basis. You want to go into, in my opinion, Roth IRAs. Even at my age, all I do is Roth 401k and Roth IRAs for me and my wife and my children. As I mentioned, Roth is paying tax on the seed, not the crop. There's some contribution limits. So the IRA is $7,000 per person, $8,000 if you're 50 or older. A simple IRA, which is very cheap and inexpensive, $16,000 and $19,500. 401k is more expensive to set up, but higher limits. And then there's cash balance plan. Cash balance plan is where you take an actuary, and I have clients putting up to $400 to $700 into their retirement plans, and maybe $40,000 or $50,000 for their employees. Beyond the scope of this and beyond the scope of my ability, but we bring in actuaries who do that. I think I'm going to wrap it up now. So thank you very much for your time.
That was awesome, Saranto. Thank you so much.
You don't need this.
So Airbnbs, anything under 14 days, tax-free?
Yeah.
Wow.
For the year.
That's awesome. That's what I feel like today, to be honest with you. I feel like I drank from a fire hose. I really do. Why don't you guys come up?